What's up, guys? So I want to make a quick update here for you to get ready for next week. As you know, with the current situation across the entire world because of this coronavirus, it's a day-to-day thing. It's very fluid. And we as traders, you as someone watching this who's trying to make money actively in the market because of this opportunity that's being created, because of this global economic situation, we as traders need to be consistently flexible. Now, this is an idea that I can't take full credit for. This comes from the book that the camera is actually sitting on top of, which is Trading Psychology 2.0 by Dr. Brett Steenbarger. And that idea of being consistently flexible, I think, is what's led me to success over the last 3 weeks, making consistent money behind the systems that we trade, even as things are flying off the rails. So today's video is going to not only kind of get us ready for next week, but I'm going to point you in the direction of the one news event that I really want you to focus on. And if we look at Forex Factory here, we're going to look at a couple different forecasts of this same news event. But what event that is the unemployment claims numbers that are coming out on Thursday morning for the US dollar. It's for the US economy. Now, as you can see here on Forex Factory, over the last couple of releases, it happens every week, you can see we're pretty close to our forecast. The previous comes in, the forecast comes in for the next week, and then the actual comes in pretty close, right? Sometimes it's a little higher, sometimes it's a little lower, but as you can see, it's all around that 200K range. The actual last time was 280K, and that was the highest since February. So normally, we're not seeing anything over 300K when it comes to how many new unemployed claims we have. But now they're forecasting here on Forex Factory this Thursday for there to be 750K. Now, if we go over to a different source and look at Daily FX for that same news event, they're claiming 1.5 million claims versus the 281,000 previous. So let's look at another source. Here, this is Yahoo Finance quoting Bank of America. They're saying it could be 3 million people unemployed when the news comes out this Thursday. Now, this news event, we're looking at investing.com, and I'll put all these links down in the description below so you can check them out. But what it says is this initial jobless claims event measures the number of individuals who file for unemployment insurance for the first time during the past week. Now, there was another statistic I saw on Twitter. Of course, it's Twitter, but it was from a reputable news source on Twitter who has, a good following and good resources to get this information. They said that the New York State unemployment website had 250,000 clicks, new visitors, every single day over the last 2 weeks. So the reason why I think this is important for us as active traders and how we're going to use this next week is we're going to watch, of course, day to day what Trump is saying and what they're saying about how it's impacting different countries and how this virus is spreading and how the tests are being, used and blah, blah, blah. We're going to watch that and pay attention to it. But what that's doing directly is just creating more volatility. Where I think we're going to see an important almost like signal for where we're headed in the next few months is here at this news release Thursday morning. If we come in on Thursday and they announce that there's 1.5 million people unemployed now, or 2 million people, I saw estimates online up to 5 million people. If it's actually that bad, we're talking Great Depression levels. And with that, we know it ruined thousands, hundreds of thousands, millions of people's lives. And it really hurt our economy and set us back so many years, and it took a while to recover. But at the same time, we have to be aware of the fact that that also made a lot of successful people as well. People saw opportunity during the Great Depression, started businesses, made investments, and made things grow out of, at that time, what was nothing. So now, with us in this situation, we're going to look to Thursday to see what the news says, to see where we currently stand as far as how many people are filing for unemployment and how many people are out of work. That will spiral very quickly. I believe, in my opinion, most of these people that are out of work aren't going to be propped up by this $2K or $200 or $2,400 a month payment from the government. I don't think that that's going to work. I think we're talking about majority of people here not having a savings, so you're asking them to kind of run on E, and that's not going to last long. And I think that that's another thing that can tumble over. But where we will see that first is here in the jobless claims report on Thursday. And we're going to watch again in the following week and see what it says then. Are we going to rebound or are we going to get worse? So it's really important that we pay attention to the employment statistics here in the United States. We're going to watch the other countries, of course, too. But the United States, especially for our economy and the direction that we go in the next 30, 60, 90 days, I think is going to be dictated a lot by this news event. So what we need to do as active traders to be consistently flexible, like I said at the beginning of the video, is that we need to come into each day with a brand new set of eyes. We want to have no bias from the previous day that would possibly sway us one way or another. We want to come in every day and read what the chart is telling us and trade in that fashion. If you go back a few days ago last week, let's look at GBP AUD. Look at how much this pair moved in just one day. 1,126 pips in one day. The day before that, it only moved 530. It doubled its ADR the next day. How do you know that's going to happen? You can't forecast that. You have to come in and read and react to what the chart is telling you. Now, a lot of the money that we've been making in our VIP chat recently has been trading euro pairs. The reason for that is because if we look at the dollar index on the daily chart, you can see over the last few days since March 10th, we've gained here on the dollar index about 8%. So with that surge in the dollar index, we're seeing opportunities to make money short the euro. Now, I was doing this last month, if you remember, in February. You can go back and watch the EuroCAD recaps there. But here again, we're still keeping that same bias because we know as the dollar index gains strength, that inversely affects Euro USD. Now you can see Euro USD in that same time frame down about 7%. So it inversely affects this pair, and this pair, Euro USD, drives other euro pairs like Euro CAD. So you can see here, just over the last 2 days, Euro CAD is down about 5%, 4.7%. Over the last 2 days, we've had multiple opportunities, if you saw the previous recap, to short this here on Thursday afternoon, and then twice, Friday at 2:30. I've made money scalping this here about 4:30 and then again 5:30, and some people even made money short here at 9 o'clock. So there's a ton of opportunity here if you're consistently flexible. And I think if you're trying to implement that into your trading, you're like, Austin, that's like some rah-rah shit. How do I actually put that to practice? To be consistently flexible means have systems with predefined entry signals, predefined stop loss, predefined risk management, predefined take profit. All of that should be preset. And apply that behind good technical signals in either direction, bull or bear, long or short. It doesn't really matter when you're trading Forex because these exchange rates are constantly fluctuating. For example, if we take a look, let's just look at Euro USD and we look at the daily chart. Here you can see from the 21st of February, which is really where the US stock market started to unravel, we saw the dollar index fall, which caused Euro USD here to rise about 6.5%. Since then, that was March 9th. March 10th, like I said, we've now come back down about 7.4%. So here we're seeing super extended moves, and they're driven by a lot of volatility. More volatility in these candles. You can see in the size of the candles, how far these are moving on an average day, way larger than it was previous. If we go all the way back on the daily chart, all the way back to 2008, into 2009. Look at how long this took to make its way to the bottom. It broke through the 50, it broke through the 200 EMA, it broke through the 800 EMA, it retested the 800 EMA, and then came a little bit lower. So you had this full move of weeks of drop, consistent days of drop, day after day after day, it was just moving lower. And you can see how well it really held that trend. July, August, September, October, November. Compare that to what you're seeing here. Look how quick it is, up and down, up and down. This volatility is unprecedented, so it's important that we apply good technical signals and we stay consistently flexible. If it tells you to trade long on the euro because the dollar index is falling, the US dollar is getting weaker, and you want to buy the euro, do it. That makes sense. Follow those ideas and use what's going on the macroeconomic level, the fundamental level, to reinforce your good ideas. And if that fundamental piece doesn't line up with your technical piece, maybe you should find a better trade. But again, it always comes back to the system. The entry signal, the stop loss, the take profit, it should all be predefined. And whether we're in a bullish market or a bearish market, like I said, because these exchange rates are constantly fluctuating, no economic crisis is going to stop this market. We're going to continue to see more volume, continue to see more volatility, and that's going to open up more opportunities for us. So I hope that the video here today kind of gets you ready for next week. Let's look to Thursday to see what the news release says for us, and let's get excited because these ADRs, average daily ranges, are bigger than ever. The volatility makes it easier to trade, and it actually makes it faster. You can get in and out of your trades in profit if you know what you're doing with your system in a much shorter amount of time than we were even 3 weeks ago. So now is the time. Take advantage. If you need anything, reach out to me, drop a comment down below. You know I'm here to help in any way that I can. Let's have a good week, everybody. So good luck on Monday, and like I said, I'm here if you need me.